Travis Anderson with Keller Williams Realty here. Let's answer a couple of questions directly from our consumers. Kyle asks, how do you turn fake estate into real estate? Kyle, it's a great question. I think you're going to have to consult somebody like Harry Potter on that one, maybe some sort of wizard. I'm not exactly sure how to turn something that's fake into something that's real, but it's a great question nonetheless. Christian asks, with the Fed saying they will cut rates 3 times in 2024, should a home buyer wait a bit more for lower rates or buy now and refinance later? And will the lower rates coming drive up home prices? Okay, so we've got a lot going on in this question. First and foremost, when the Feds are talking about lowering their Fed rate, that is not a direct link to mortgage rates. So the Fed rate going from 5 to 4, let's say, does not take mortgage rates from 6 to 5. Not at all a direct link. Mortgage rates are tied to treasury bonds and how investors are moving money in and out of the treasury bond market. Mortgages have, I don't want to say nothing to do with the Fed rate, but there is no direct correlation. There may be a very slight indirect correlation. So keep that in mind as we talk more about this. So number one, I would not depend on what the Fed says about lowering rates has any effect on mortgage rates. So number one, I would start there. Do not listen to the Feds and cutting rates and apply that to mortgage rates. That would be a huge mistake. It just simply isn't true. So number one, let's start there. Number two, should I refinance now or should I buy now, and refinance later, or should I wait until mortgage rates come down, regardless of what the Feds say? Let's answer that question. Here's the truth of the matter. We need to try to determine, talking to a really good mortgage broker, assuming that you're obtaining a mortgage because you're talking about mortgage rates. We need to talk to a good mortgage broker about how much you can afford. Okay, that's question number one. And once we know how much you can afford, we look at that into what's available in the market. And if it makes sense for you and your family to make that move, whatever it is, then it makes sense for you and your family. And if it doesn't, it doesn't. Here's the truth. Most of the people who could have purchased a home, let's say 2 years ago or 3 years ago, just can't do that same thing today because of the mortgage rates. Because of what they qualify for doesn't allow them to do what they want, so they're simply not going to be moving. So I don't think it's a matter of whether I am making a suggestion on whether you should move or not because of rates. I think if you're able to move and you can do what you want and get what you want, then let's move. And if not, then let's not. So we need to kind of look at and explore that. Here's what I'm noticing. Most of the people I'm having conversations with that are sellers and we're looking at selling their home for some amount and then moving up and buying something bigger with the higher interest rate, they're deciding to wait. Mostly because they're unwilling to pay the cost to make that jump. I think that's a total rational response because the cost to make that jump is going to be 2 times or 3 times or 4 times what it costs before. Let me explain. If a $400,000 home 2 years ago had a 3% interest rate, then that's some number. Let's call it $12,000 in interest. That same $400,000 home have a 6% rate, that's $24,000 in interest. So the same home today is twice as expensive. Now, if you're going to buy a bigger home, now it's more than 2 times expensive, maybe 3, maybe 4. So those numbers and knowing those numbers and deciding for ourselves what we can afford, that's going to help us uncover if we're willing to make the sacrifices in order to make that jump. Now, let's talk about refinancing. I don't think anybody should buy a home with the intent of refinancing in the future. If I go back to my career in 2010, this was advice directly from most of the mortgage brokers that I knew. Go ahead and buy now, refinance later, no big deal. That is horrible advice. If the rates drop, awesome, go ahead and refinance. But never should you make a purchasing decision with the expectation that rates are going to drop. I think that's a bad practice altogether. That's going to put us into a really bad financial situation as individual consumers. So make those decisions smart and make them about what you're able to do, not what you want to be able to do. And then lastly, you asked, will the rates dropping increase the value of real estate? I think the answer to that is maybe no, and here's why. In 2023, we actually had a decrease of listings substantially because of the interest rates. There are more people doing essentially what we're talking about, waiting to move because of those interest rates. I think we're going to see a little bit of a bounce back here in 2024, but it's not going to be what it was in 2022 and prior, let's say all of the way to 2012, the previous decade. It's not going to be anywhere near that, I don't believe. So that means that a decrease in rates might dramatically increase the number of homes for sale. If the number of homes for sale dramatically increases, then the price of those homes will be coming downward. So I'm not sure if lowering rates will actually increase the price of homes. If lowering rates means more homes comes on the market, it will either have a stagnant effect or maybe even a lowering of home price effect. So that's my thoughts on that. I'm not exactly sure if I'm right. It's impossible to predict the future, but I hope you enjoyed this video. If you've got questions about buying, selling, or investing, my name's Travis Anderson with Keller Williams Realty. Go ahead and give me a call, shoot me a message. Let's have a conversation.